and we're going to talk about rates and real estate and recession, because that's a big one. How does recession affect all these things? Well, we got to change our thinking a little, folks, because the last couple of years have been interesting. Crazy real estate market. But if we want to address some of the concerns that are happening now, we just have to think a little bit differently. So the first thing I hear in the media a lot is that the purchase market is down significantly. Well, it depends on where you're comparing it to. If you recall, this is showing you how many purchase transactions there are. If you recall, during COVID, we had a big shutdown. So look at how activity got shut down and stopped. This was a pretty big hole. There was a makeup period after that. So 2020, shut down. 2021, big makeup period. So this was extraordinarily low to make up extraordinarily high. So if you're looking where we are today and you say, okay, well, let's compare it to a year ago during that makeup period, it looks as if we're down, clearly. But that's an abnormal comparison. If you compare this to any time in 2020, very favorable. To all of 2019 or 2018, it's better than it was. For most of 2017, it's better than 2016, 15, 14, 13, 12, 10. Where we are now is a really good level of purchase activity. So this is what the media tries to do. The media doesn't care about the truth. The media simply cares about fear, because that gets eyeballs, and that means they could charge more for advertising. Now, we talked about inflation driving mortgage rates, and here's a chart that shows it. So let's look for the last 50 plus years. The white line is inflation. The blue line is 30-year fixed rate mortgages. So notice when inflation spiked higher, there's a delay, but then mortgage rates move up. When inflation comes down, mortgage rates actually initially went up a little bit, but then there's that delay, and mortgage rates follow suit. And notice how this pattern happens again. And here we are. Inflation's rocketed higher. That made the move first. A little bit of a delay, and mortgage rates are simply following suit, going from somewhere around 2.75% to now about 5.5% to 5.75%. So these are all occurring right now. So if we want to know where our mortgage rate's going to go, well, where's inflation going? When are mortgage rates going to come down? When's inflation coming down? So let's examine that. So here's the latest data. Now, don't worry about this chart. I'm going to break it down, and it's going to be very understandable. This gives us a lot of information about inflation. So one of the ways we measure inflation is called the Consumer Price Index. And we just got the release this morning. So the Consumer Price Index, what happens is it measures year over year inflation. So the way that it does it is it takes the most recent 12 months of data. So today we got the data for the month of June. So you go June all the way to July of 2021. So you take these 12 months here, you add them together, a little rounding, a little compounding, and you get the current rate of inflation, which right now is at 9.1%, the highest that many people have seen in their lifetime, certainly in their adult lifetime. So when this occurs and we want to take a look at when will inflation come down, we start to look at the data that's going to come out next month. So as you could see, for the month of July alone, inflation was up 1.3%. Now, there were many years where inflation did go up 1.3% a year, but look at how hot it's been since the spring. As we get into the summer months, my fear is that you're going to be replacing numbers that are pretty modest for 2021. So when the 2022 numbers come in, if they're even remotely as hot as we have seen here, you're going to wind up with higher inflation numbers over the summer. And get this, all the headlines will be inflation 10% year over year. I think that is very realistic that we see that. Now, don't believe all these folks that come on TV and they say, oh, we think inflation's peaked. You know why? Because they don't understand it. They're not looking at this. If they would look into the future a little bit and they see what we're going to be up against replacing, they will understand that there's a really good possibility, maybe probability, that we see 10% year over year inflation. Now, from what we know, that means mortgage rates probably start to move up even further over the summer months. So I just want to brace you for that. But it's not all bad news. It's actually really good news. Here comes the good news. Once we get to the fall and the fourth quarter, a lot of things will fall into place. Remember, we talked about goods coming back. So that should alleviate inflation. In addition to that, the comparisons to 2021 are higher. So we should start to see our inflation come down. The comparisons are now higher. So we probably will see the year over year numbers come down just based on those two things. But there's another thing. The Fed hikes will really start to bite by then. So as the Fed hikes again in a couple of weeks, and then again in September, probably bringing the Fed funds rate to about 3%, now people will have more of an incentive to save. People will borrow less. The economy will slow down. And if we're not already in a recession, we more than likely will be in a recession by the second half of this year. Now, I'm going to explain what that means. But first off, we were the first to call our previous recession. Everybody thought we were crazy.